Hey guys, today I am talking about how to get a mortgage. A lot of people think it's hard. Wrong. It's really not that difficult, but a lot of people make a lot of mental barriers and just discourage themselves and count themselves out. And I'm here to inform you and let you know that it's really not the hardest process in the world. Of course, it's complicated, but that's why you have professionals that you work with who do their job well and handle all these complicated issues. It's important for you to understand at least a little bit about what's happening in the process. So that's what I'm talking about today. And quite simply, the first step is to find a good loan officer. The best way is through referrals from friends and family, people that have worked with a loan officer and thought they were really good and explained a lot of things to them and helped educate them. That's what I think makes a good loan officer, someone who really takes the time and makes sure that you understand what's going on to the best of their ability. There's a lot of crazy stuff with mortgages, but hopefully they're explaining these things to you. The second way is to work with a real estate agent, and normally they will refer you to a good mortgage loan officer. The reason why it's helpful to have the agent on board is that normally they have a good relationship, they have good communication. So me, for example, the loan officers that I work with, I could call them at 9 o'clock at night and ask them a question that I really need an answer to that might affect your loan or how we negotiate. And so it's really important that the realtor has a good relationship with the loan officer. But if you like a certain loan officer, you should go with them. That's the most important thing. I will say I'm not a big fan of call center loan officers and big bank loan officers. So I'm talking about Bank of America, Wells Fargo, or one of these mortgage companies that's like online or that you only talk to on the phone. You're just a name and number to them. They're normally less skilled than someone that deals with a lot of complexities and different types of mortgages. Also, they don't know your local area a lot of times, so they won't know how to estimate your property taxes. They won't know if a property is in a flood zone, things like that. And just overall, I don't think they're that good. So I would shy away from it. That's my personal opinion. You could do what you want. The next step is to call or email the loan officer, tell them you're interested in buying a house. If you're within about 6 months of the time where you want to buy a house, let them know you want to get pre-qualified. Once you're having that conversation, if it's on the phone, basically they're going to ask you about your income. They're going to want to pull your credit. My thing about this is a lot of people don't like to get credit inquiries, but the whole reason you protect and build up your credit is for a time like this when you're buying a house or a car or a major purchase. You want to leverage your credit so that you can use it to get good debt, like buying a house. So don't worry about the inquiry. The other thing, real quickly, is that you should shop around and don't be afraid to get multiple credit inquiries for the same thing. So if you're getting a mortgage and you go to 3 mortgage companies and they all pull your credit, that should still only count as 1 credit inquiry against your credit because you're shopping for the same thing. Where it gets negative for you is if you go to a mortgage company, then you go looking to finance a car, and then you look for a motorcycle, and then you get a credit inquiry for a boat. Those are all separate inquiries because they're different types of credit. That's a red flag for lenders and on your credit. So don't do that, but don't be afraid to shop around or talk to multiple people. Don't think that you're locked into one person because you don't want to take a credit inquiry hit. Credit inquiries are the smallest rating factor for your credit as well. So don't worry about it too much. Some other things the loan officer is going to ask you about is your marital status. If you're divorced, are you paying child support? Do you have foreclosures, bankruptcies, anything like that they're going to want to know about. Don't lie to them. Don't be misleading. Don't fudge the numbers about anything because all this stuff's going to get verified when you actually apply for the mortgage on the property you want to buy. You're not going to slip through the cracks. It's not going to happen. You're not going to be sneaky and get through. Don't do it. You're going to waste everybody's time, especially your time, because you're not going to get the mortgage if they find out you're lying, which they will. Look, it's helpful to have your income documents and all your documentation, But don't put it off because you don't have these documents. A lot of times you can have a verbal conversation with the loan officer and then they'll follow up and get those documents later, because a lot of people will just procrastinate and put things off, and it's really not good. So it's helpful to have your income documents. It's not critical most of the time. I've done a couple of videos about credit and mortgage qualifications in the past. I'm going to link them up here. They might provide you more detailed information about the different topics that we're talking about. At the end of the conversation, the loan officer should be able to have all the information they need to get you pre-qualified to a certain purchase price. I recommend that you just let them pre-qualify you to the maximum. I'm not recommending you buy the house, the most expensive house that you could. I'm just saying you want to see what the max is, just so that you know. That doesn't obligate you to buy a very expensive property. One thing to note with pre-qualification prices is that they use estimates on the insurance and the property taxes. And that's why it's important to have a good mortgage loan officer, because you're going to want a loan officer that knows how to estimate the property taxes for the area that you're buying in. Because if you get qualified in an area where they estimate the taxes too low, you actually won't be able to get the mortgage at the price that they said. So you have to be careful about how they're estimating your taxes. Also, if a property requires flood insurance, the pre-qualification amount, if it's $200,000, might be reduced to $180,000 or even lower, depending on the cost of that flood insurance. So you want someone that's knowledgeable in the area to check for this, because I've seen times where, for some reason, especially if you're working with one of these loan officers that don't know the area, you get all the way through the process and then you find out that it needs flood insurance, and then you don't qualify anymore because your debt to income ratio doesn't work. All right, you found the loan officer, you had the conversation, you talked about all the things that you need to talk about to get pre-qualified, and then they give you the answer. And this is where I want to talk to my people who are worried about getting qualified or are afraid or don't want to hear no. It's so important that you go through this process, even if you hear that you're not qualified, because the good loan officer is going to tell you why you did not get qualified, and then you're going to know exactly what you need to do to turn that no into a yes. Now, if you're talking to a bad loan officer and they just say, oh, your debt to income ratio isn't good enough, boom, see you later, that's a problem. Because now you don't really know what the heck they're talking about. What's the debt to income ratio? How am I going to do better? But if someone explains it to you, then you will know, oh, I need to reduce my debts so that I can afford this house. Or I need to improve my credit score by 20 points by doing X, Y, Z. That's the value of a good loan officer, and that's the value of actually taking the time to getting pre-qualified. A lot of times people will just Google stuff and they're taking themselves out of the game before they even have a chance. And don't do that. Talk to a professional, have them walk you through what's wrong and get it resolved. And then next time, it could be in a couple weeks, a couple months, maybe it might take a year depending on your issues, but eventually you will get qualified. But if you don't start the process, it's never going to happen. For the people that got pre-qualified, that doesn't mean that you have a mortgage. It's just saying that they have screened you enough to be confident that you would be able to get a mortgage. You actually apply for the mortgage once you get a home under contract. And at that point, you would pay out of pocket normally for an appraisal. That's usually $400 or $500 in our area. The appraiser is going to go out. He's going to value the property based off of other similar properties that sold in the area, and he's going to put a value on the property. If this value is lower than the loan amount, the bank will not loan you more than whatever the appraiser came up with. You can appeal this appraisal. You could renegotiate with the seller to drop the price to the appraised value. You could bring cash to settlement to pay the difference, or you could walk away from the deal at this point. After you get through the appraisal portion, your loan goes into processing. They're going to ask for a whole bunch of documents so that they could send to someone called an underwriter who looks at your loan and makes sure it follows a whole bunch of guidelines. But before that, your loan officer should have already screened you. So if you're pre-qualified and you told the truth on all your stuff, you should be fine going through this process. Once the underwriter stamps off, it says, boom, you're good. You get something called a clear to close, and then you would be able to purchase the property. You go to settlement, you sign all these documents, and then boom, you got your mortgage, you got your house, and you're good to go. And now you're a homeowner. And that's it, guys. This is a super simplistic version of getting a mortgage, but if you don't have any issues and you're a strong borrower, you call the loan officer, you talk about your income and answer all those questions. You get pre-qualified, you get the house under contract, you get the appraisal, you submit all your documentation, and that's really it. Real quick, I want to talk to the people that are afraid of hearing no. This is a really bad thing, because if you go through the process, you will become so much more informed and make better decisions. Don't rely on Google. Don't rely on this video to teach you everything you need to know, because there's too much to know about mortgages for an individual to just assume things. Talk to the professionals, start the process. You know, a lot of the reason why I do these videos is for people who don't have people around them who have this information. If you don't have any family members or friends who own homes, it's really hard to really understand the process, and you can really get discouraged. And that's why I'm here. Reach out to me, put it in the comments, or you can call, text, or email me directly. I will answer every single person that reaches out to me, and I'll point you in the right direction and give you my advice. Thanks, guys. Bye-bye.